All right, let's get right into it. Today, we're breaking down everything you need to know about UAE VAT compliance for 2026. If you're doing business here, listen up because this is information you really can't afford to ignore. And this quote, it just hits the nail on the head, doesn't it? In today's climate, getting VAT wrong, even by accident, is more costly than ever before. The margin for error has basically vanished, which means being diligent and professional is absolutely key. So that brings us to a really important question you should be asking yourself. And look, we're not talking about trying to cheat the system. We're talking about simple administrative slip-ups. Could those little mistakes be putting your business at serious financial risk? So here's our game plan. We'll start with the real cost of making a mistake. Then we'll get clear on your filing cycle and break down that crucial 28-day rule. We'll look at the penalties, show you the right way to fix errors, and finally, talk about what it really takes to be audit-ready. Let's dive in. Okay, first up, the high cost of mistakes. The thing to really wrap your head around is that the biggest threat these days isn't some big fraud scheme, it's the small procedural errors, the kind of thing that can trip up even the most well-intentioned businesses. And here's why. The Federal Tax Authority, or FTA, has gotten way stricter and a lot more data-driven. They're not just looking for the big fish anymore. Their systems are now smart enough to flag all those little inconsistencies and errors that might have flown under the radar in the past. And what's really striking is just how basic these pitfalls are. We are not talking about complex tax strategies here. As you can see, it's things like missing a deadline, a simple typo in a tax return, or accounting records that just don't quite line up. These are the little things that can snowball into a massive headache. So, how do you avoid those pitfalls? Well, it all starts with mastering the fundamentals. And the very first step is understanding your specific filing cycle. The whole system is basically split into two tracks. On one side, you've got quarterly filing, which is the standard for most small and medium-sized businesses. On the other side, you have monthly filing, which is usually for the bigger companies with higher turnover. And here's the general dividing line. While the FTA always has the final say, an annual turnover of 150 million dirhams is the typical benchmark. If your business is operating at or above that level, you should probably expect to be filing every month. And this is a really critical point. This is not your choice. The FTA analyzes your business, and they are the ones who assign your filing frequency. You have to stick to that schedule unless you get official permission to change it. Now, whether you file every month or every quarter, there is one rule that applies to absolutely everyone. So let's get into our next section, the universal and non-negotiable 28-day rule. This rule is as simple and as serious as it gets. It's not just about submitting the form. Both the filed return and the full payment have to be in the FTA's hands, received by them within that 28-day window. So here are the key details you need to remember. This applies to everyone. Being even 1 day late can trigger penalties. And while the deadline will shift for a public holiday, the only place to get your official date is your Amara tax account. Always check the portal. Okay, this brings us to the really sharp end of compliance. What actually happens if you miss that deadline? Let's break down the financial consequences because they escalate, and they escalate quickly. The moment you miss that filing deadline for the very first time, you are hit with an immediate fixed penalty of 1,000 dirhams. It's a straightforward and pretty costly administrative fine. But the system is designed to penalize repeat offenders. So if you make that same mistake again anytime within the next 2 years, that fine automatically doubles to 2,000 dirhams. The FTA is sending a very clear message here: learn from your mistakes. Now, everything we just talked about was for filing late. Paying late is even more severe. As you can see, it starts with an immediate 2% penalty on the tax you owe. After that, another 4% penalty gets tacked on every month to the outstanding balance. It compounds very quickly. And the potential damage here is just enormous. The maximum penalty for paying late can reach a staggering 300% of the original unpaid VAT. That number alone should tell you exactly how seriously the authorities take late payments. So what happens if you realize you've made a mistake after you filed? The professional response is not to ignore it and hope for the best. Let's look at how to fix errors the right way, using something called a VAT voluntary disclosure. This is the official government-approved process. By submitting a voluntary disclosure, which is Form 211, you are proactively informing the FTA that you made a mistake and you want to correct it. Believe me, it is always viewed more favorably when you find the error instead of them. And there's a very clear professional process to follow. First, you identify the mistake and figure out the financial impact. Then, and this part is critical, you have to disclose it within 20 business days of finding it. After that, you submit the official form and pay any tax that's due. It's a structured path right back to compliance. This brings us to our final big picture section, because good VAT management isn't just about avoiding fines, it's about building a robust professional system. So let's look at what it really means to be truly audit ready. As you can see here, the risks go way beyond just the financial penalties. Poor compliance can put a real strain on your cash flow. It can delay legitimate VAT refunds you're owed. It can cause problems when you try to renew your license. And it definitely increases your chances of a full-blown FTA audit. And of course, it can damage your professional reputation. So, as we wrap up, I'll leave you with this one last thought. Take a really hard look at your internal systems. Are they designed just to get a form submitted on time? Or are they truly built for robust, professional, long-term compliance? The